JD, today we've got Warren Irwin that we're interviewing. What do you know about Warren? You and I have both consumed a bit of his content over the time. Why do you reckon this guy is interesting to the money miners?
Yeah, so we've followed him for a little while. He sort of stands out because he's quite frank, an approach we're quite fond of in how he approaches the media and how he talks about investing in the mining space. He's also spun a few yarns regarding BRIEX in the 90s, which just make for great listening, and he's written some interesting articles. And
he's a fundy, right? So he's Rosseau Asset Management is his fund. And some fundies are pretty quiet. They'll go about their business and invest and let the returns speak for themselves. I think Warren has a bit of a different approach in the sense that he's very vocal. He sets his position, and then in a way he's so vocal, I think he tries to move markets sometimes. And quite often, the market catches on to the good thing that he's on. And NextGen is a fantastic example of that, where he was, I think, the first institutional investor in NextGen.
He had a 10% block at one time, and he's been around the block. He's been running his fund, for 25 years now.
25 years is a long tenure as a fund manager in the resources space. You sort of as a fundy, don't really see through cycles very often as a fund manager in resources, because it is so cyclical.
Yeah, and I'm sure we'll touch on that and ask him the question how he's managed in such a volatile, such a cyclical sort of business to endure. So I think without further ado.
G'day, Warren. Appreciate you joining us all the way from Canada. Understand there's a 12-hour time difference right now, so it's bright and early for you and late at night for us. It's a pleasure to have you on the line. I mean, you've got a great reputation of investing in juniors all the way through to acquisition, and sort of capture that re-rate along the way. We think you've got some very interesting stories that our audience would really benefit from, and some particularly interesting views on the market. And so, with that, we'd love to pick your brain for as long as we can on those very topics.
Well, I'm happy to try.
I'm keen to get an understanding of how you sort of see the resource space at the moment, just broad macro things. We've seen a bit of M&A at the big end of town, and just interested to hear how that looks like from Canada at the moment.
From Canada, we're in a very unique situation. There's been a bunch of weird things happening here in Canada, which I don't know how it'll end up playing out. But one of the weirdest things that's happened in Canada is we've had our government ban us from selling Canadian juniors to Chinese government-controlled entities, meaning if we have a project in South America and we're listed in Toronto as a junior, we're not allowed to sell it to the Chinese. And that's really just thrown a wrench in the whole thing, because as you're aware, with a lot of these projects, especially copper porphyries take a ton of time and money to drill up, let alone build. And as far as you look around the world, the number of entities that could build these massive copper porphyry mines, the Chinese are right up there. And if we take those players out of the market, guys like myself are going, well, then who am I supposed to sell it to? I have to now I'm beholden to, the free ports of the world. And that really, really has thrown a lot of cold water on the Canadian mining sector, in my opinion. For a lot of people, they don't see that because you don't sell it to the Chinese. But if you look around the world at all the projects that have been discovered and then sold to the Chinese, basically the Chinese are the buyers. They're, it's nice to say, well, you can only sell to Western miners, but Western miners, frankly, are not buying mining properties at the pace of the Chinese. And this all stems from, I believe, behind the scenes, the U.S. government Defense Department is putting pressure on all its allies to make sure that the Western world has access to a lot of these commodities. And so the issue is they're trying to help, but they're really harming, because here I'm going, well, I'm not going to put any more money into finding copper porphyries, because who am I going to sell them to? And then even if we do find a copper porphyry, when's the last time you've seen a copper smelter built in Canada or the US? The smelters are in China. So it doesn't really matter where you mine it. It matters where you smelt it, who gets control of the copper. So I think a lot of these government policies have really not been thought through, and I don't see that changing anytime soon. So very, very concerned about that, because I don't want to be told by our government once we find a mineral deposit who we can sell it to. And the interesting thing about it is, here in Canada, we're buying a bunch of goods from China. So what's China going to build our air conditioners out? Are they going to, if they don't have copper? Well, where are they going to buy all the goods we import from China if they don't have the copper? So I think these policies are a knee-jerk reaction, and it's absolutely ridiculous. In Australia, you guys have the similar issue where the government gets involved in things that they really shouldn't. And I'm just looking as an observer outside of Australia, and I see what you guys are doing with uranium mining, with a massive. Like I haven't been able to figure out where and when you can mine uranium in Australia. So obviously, I'll never put a nickel into Australian exploration for uranium, despite the fact that you've got massive amounts of uranium. I don't understand why you don't mine uranium. It's the only way to provide, any significant, serious baseload non-CO2 generating. So I don't understand Australia there, and I don't understand Canada here. And these policies, I think, are obviously screwing up the market and makes it increasingly difficult for me to make investments, to find new projects. And I'm trying to get my head around that, frankly.
I mean, you're looking at like the M&A that's happening in Canada, and we can talk about copper, specifically. There's the Copper Mountain merger. I mean, on a broader context, the Glencore sort of tech behind the scenes stuff. Is that sort of deal flow that is really not, of undeveloped projects, which you speak of, and more about, consolidation of larger companies or disruptions to commodities? Is that a consequence of the policy landscape?
You know what? No, I don't think so. I think what we're seeing here is the larger companies are trying to find dance partners, and they're trying to get those mergers done first. They're all sitting on mountains of cash. So they're trying to get those mergers done first. And once those mergers are done, then they'll all look at each other and go, well, now what do we do to rely on to get growth? And the next step will be, we have to actually start building mines. And when you look at Glencore specifically, under Ivan Glassenberg, Ivan wasn't a big fan of building new mines. He was basically, I've seen him on stage a few times going, okay, guys, why are you building all these mines? Let's not build any mines. Let's just get a lot of money for the stuff we already have. Why are we overcapitalizing the market here? Let's not do that. And that leads to the cyclicality of our business. Let's keep supply tight. Let's not build new mines. So it doesn't surprise me that Glencore is doing this, because they seem to have a propensity of buying existing production rather than to build new mines. So I think that'll work. I think for the mining industry in general, until all the dance partners are chosen, there's no more dance partners. Then they go to the next level, which is let's make some acquisitions. They may start making acquisitions of smaller producers, and then once they've hoovered up all the good smaller producers, they'll go, now we'll start building mines. Because the sense I get, a lot of these big mining companies would rather not build mines. It's a lot of work, a lot of hassle, a lot of permitting, a lot of risk. And they'd rather just, trade assets amongst each other initially. But eventually we'll get to the stage where they'll actually want to build some mines and grow production from greenfield sites.
So Warren, that sort of plays into how I've heard you talk about your investment philosophy. And you like to, from my understanding, find undeveloped projects and ideally not take them to that stage where you have to develop them, but have the majors come in. So how does that sort of impact with, I guess, less acquirers out there? How does that sort of impact your investment philosophy and the projects you're sort of looking at, or how you sort of approach the market?
Yeah, no, it's interesting there. Just a quick of my philosophy is generally what I try and do is just follow some juniors very closely. Where I've had probably the most success is not necessarily sprinkling money to every single little junior with an idea. It's finding a junior that's actually started to get some traction and invest in them. And the types I look at are ones that have got some traction. It's clear there's a potential for something really big, and I jump on that, follow them very, very closely. And I try not to buy juniors that have projects that are too small, because I always want to offload them to majors. So they need to have a level of scale that the majors would care about. And in my experience, dealing with small discoveries is a complete waste of time. It might work for, the retail investor, but for myself, I need an exit, and that exit is a sale to a major. And generally they don't care about the smaller stuff, and the smaller stuff is a huge hassle. So I stay away from the smaller stuff, look for world-class discoveries. Most recently, the one I was involved in is big NextGen discovery. I was the largest shareholder in the early days of over 10% of NextGen. And that's the world's biggest and richest uranium discovery. And
look, both Jonas and I are very familiar with that one. We've both taken pretty close looks at Arrow.
Yeah, there's a bunch of funny speaking executives there. They almost speak the same language you do. I think they speak Australian. Some of the senior management at the company. Yeah, so I have to actually deal with it. I have to deal with Australia as a fair amount, and they're quite a bunch. So the ones I deal with are mostly based in Vancouver. They're all
Vancouver or Perth.
Yeah, well, the ones in Vancouver. If any of you guys know them, they're pieces of work. They love to party, they love to drink, and have a good time, and some of them find some pretty amazing minds. So they're quite a crew, and I think they're great guys to hang with, and I back them from time to time. And in the case of Lee Courier, an Australian guy, and he did a fantastic job in bringing forth a NextGen, and he's done a great job. And actually, there's some Australians on the board too, so there's Australians freaking everywhere.
That's because there is Australian shareholders, I'm sure.
Warren, I'm keen to go a bit deeper on that sort of investment philosophy you've got. I've heard you on a few talks talk about how Rosseau is one of the longest, or if not the longest, lasting natural resource fund manager out there. So what's the sort of key reasons you think that you've had that durability through the various commodity cycles?
Yeah, I think it's probably the best thing to say is I'm the longest running, certainly here in Canada and in North America that I'm aware of. We're the longest running hedge fund manager focused on the resource space. So there are a bunch of people who have, like a bunch of the big fund companies have these little resource funds that, grow up to $1 billion in size during the bull market and down to 50 million during the bear market and that sort of thing. So they've been around a long time. But what's unique about us is we've been around for 25 years. It's one solid record of performance, and I've been the guy running it for 25 years. So it's very unusual to have somebody run the same fund for 25 years in the resource sector. And your question about how have I survived? It's by being very, very nimble. And because, as you know, these resource down cycles are just absolutely brutal. And I remember, not that long ago, you'd lose in some of your names, you'd be down 80, 90%. So if you're 100% invested, you're in deep trouble when that happens. So it's a very, very cyclical market, and you can really get laid out. And possibly part of the reason I have survived and others haven't is I haven't fallen victim to the desire to take a lot of assets at the peak of the market. I remember several instances in Canada where funds have taken, a couple $1 billion in assets to run in junior mining, and boy, they get laid out when the time comes and things turn around. I'm nimble enough; I could get out. I'm just trying. I think at the last peak, I was around 300 million. So that was, small enough, nimble enough. I could get out of it. And
is there a long short dynamic to the process as well?
Well, from time to time there is actually. When, for instance, in 2008, I was 75% cash, 25% long, and 25% short. So that was probably the most fully hedged I was, and that saved me going through the big collapse there in the 2008 area. But the thing I find is with a lot of these things is the beta in resource stocks is so strong that if you're long ABC copper company against XYZ copper company, when the boom happens, the investors don't care. A lot of them really don't have the level of knowledge that I may have to tell the differences between a good copper company and a bad copper company. So they just throw their money at both. And so if you don't want to make any money, that's what you do. And then is go long one, short the other, and they both go up. So then nothing really is accomplished. So it is, given the large cyclical nature, it's very difficult to do the long short thing.
Yeah, the worst projects that are better promoted get pumped the most. Yeah,
and then when the resource cycle happens, all the boats all the boats, a rising tide lifts all the boats, right? So I've seen this both when we invested in the early days, we're doing a bit of tech investing, same story there. So you need to take some risk there. And as far as me making big money on shorts in the resource sector, it's pretty tricky to do because they're getting the borrow on some of these shorts is at times very difficult. And the prime brokers I'm dealing with, it's very difficult to get them, and they won't allow me to do naked shorting, which is, I believe, not legal anyways, but there are people doing it. It's very difficult to short resource stocks. And so you pretty much need to make sure that you've got tremendous downside protection through the asset quality.
And so when you do take a short position, are you trying to short based on an assessment of overvaluation, or is it based on an assessment of potential fraud, or all of the above?
Well, generally shorting juniors is really difficult to do. As you can know, they can rip it in your face pretty hard. Where I've shorted in the resource sector before, I could think of tech. I shorted tech when I think it was $18 and I covered when it was $4. So that's an instance where I was able to get borrow. It's a big liquid name. There were concerns. I think a couple of cycles ago, the tech was going bankrupt. So that was a good one for me because it had a credit aspect to it. It looked as if they were being stressed very hard financially, and then but of course the lesson I learned from that one was sure, I made a bunch of money from 18 down to 4 on the short, but the real money was made from $4 to $40 when it rallied back up. And that's the other thing, right? You cannot make as much money shorting as you can on the long side. That tech example is a good one because, you know, if you shorted, $18 stock, you covered at 4, a big whoopie-doo, you made $14. But if you bought it at 4 and you sold it at 40, you made $36. So, but
the important thing is you had the cash available when no one else had cash to invest it in cheap names.
Yes, the other real gem too. You're talking about keeping cash on the sidelines. Like that little flash crash of 2020 was epic, because I think Next Gen went from, I think it was $5 down to 80 cents, and then within 9 months it was back at $8. And sadly, I rode my Next Gen shares all the way down, all the way back up again. But I didn't have the amount of capital on the sidelines that I could have taken advantage of that. That would have been a tremendous opportunity. So
I've just seen on your website, Warren, as well, you reference use of leverage. How do you sort of incorporate that in the resource space already being so volatile?
Yeah, I'm not using leverage right now. I haven't used it in a while. Generally, when I use leverage is to take a situation that may not be quite as risky and crank up the risk. For instance, if I decided to go long a bigger cap name, for instance, I would take a look at using a bit of leverage. But with the juniors that I generally invest in, I think they're risky enough. You're exactly right. They're risky enough without using leverage. Using leverage is a good way to get laid out. I've seen instances where, in Canada, you could borrow once the stock's over, you could borrow 50% on margin once it gets over $2 a share. But, I've seen so many juniors go from $5 to $1.50 and back up to $5 again. So, those margin calls come hard, they come fast, and there's no mercy. So I stay away from borrowing and when it relates to juniors.
So, yeah, Warren, you make your money, large amounts of money, the best wins you've had by investing in these juniors who they've got a great project and it's not advanced enough yet to have full value in the market, and you ride that wave as it becomes valued appropriately and de-risked over time. And I think we're pretty interested in that dynamic that happens with developers, and I think our audience would love to know what your thoughts are on some of those undeveloped projects in the Aussie market. Is that an area that you play in at all?
Yeah, I've learned to stay away from the Aussie market, and I know a lot of Canadian investors do play in the Aussie market, but I find that it's very difficult to keep a relationship with management and keep up to speed on things. And I find there's a tremendous incentive on management knowing that I'm 2 blocks away from them. I go so I could walk down the street and punch them in the head if they do stupid stuff. I found it very considerably different in Australia because they kind of think, there's this guy in Canada, he's 24-hour plane ride away, he's in a different time zone. I can do whatever I want. He doesn't know what he's talking about. So I try and stay away from that. And I find that sticking with North American juniors are generally the better thing to do, and it has worked better for me. I cannot think of, for instance, also with respect to my my ability to get in the trap line with respect to this Canadian term, I guess I shouldn't use it, but the trap line meaning I have a number of contacts in Canada. They're quite a bit better. And I do remember missing out on the serious nickel play some years ago, just because I wasn't involved in that closely enough with the Australian market that I kind of missed that until the valuations got pretty high and it wasn't worth me getting involved in it. So my trap line here in Canada, I grew up, spent a bunch of years when I was a young kid in Timmins, Ontario, Canada, which is a big mining town. It's a center for gold mining in Canada. So I've been around the mining business a long time, and I know a lot of people. And I find that my contacts here in North America are quite a bit better than they are in Australia.
Well, look, Warren, both Jonas and I grew up in pretty substantial mining towns here in Western Australia, and Jonas has got a spare pair of boxing gloves on him. So if you need us to punch anyone in the face, then we'll volunteer to be your associates down under. but given the fact that you're familiar with the Canadian names, there is one dual listed stock that we've become very closely linked to, in the sense that I think it's just inextricably linked to our growth at the moment, and that is Patriot Battery Metals. So, what's your view on that company and the Corvette discovery? Have you got any commentary on that?
No, I know some board members on Patriot. I have not been following any of the lithium, and possibly it's just I've stayed away from lithium because I've been around the world and I've seen a lot of lithium deposits, and I know there's massive amounts of lithium out there. So just long term, I'm not a big fan of getting involved in lithium because it's nice to it's nice to have this nice little lithium run here. But the reality is, I know where there's lots and lots of lithium around the world, so I'm not super duper excited to run around and find it. It's like people getting all excited about graphite too. I'm going, man, for decades in the mining business, when we missed the target, we saw, we hit some graphite. Oh, damn it. But now, hey, we hit graphite. It's great. Some clown in the US wants to buy our stock. But, so I stay away from lithium because I know there's massive amounts of it. And over time, I believe they're going to crack the code on a lot of lithium brines down in Bolivia, which will give us all the supply we need of lithium. And so I'm staying away from that one. I just because I cannot predict the cycle there when lithium will eventually collapse as more and more supply hits the market. So
I'm keen to get your thoughts on copper as well, Warren. So I've heard you speak on a panel about it, and the dynamic sort of being discussed was that everyone's relatively bullish copper, but a lot of the inputs, the costs into mining and so on, will rise as well as the copper price goes up. So I'd like to sort of get your take on how you go about picking good stocks, or do you really just stick to projects you like at an earlier stage?
Yeah, I try and be focused mostly on the project, the economics of it, and the commodity second. There are some commodities that I like. For instance, copper is one, but increasingly, copper is really tricky because if we as Canadians are unable to sell to state-controlled Chinese companies, that really hurts us. And so almost to the point where, if I was a junior copper company, I would never list in Canada. So that's one issue. The other metals, of course, I like are nickel and some others. But I really like it. Like, when I look at it, I look at, well, what's a commodity? Is that a commodity I think is one that I want to get involved in? If it goes yes, okay. Is it in a jurisdiction I'd like to get involved in? Does it have a chance of getting permitted? Does it have a chance of having some size? Does it have good people? And what are the capabilities of those people? And another Canadian term, putting the puck in the net, right? Or basically making things happen. So if you get those things all together, then you have a chance at it. And even then, you could have a monstrous disaster with the wheels falling off for a whole bunch of things. As you know, we have globally, there's all sorts of issues that could screw up permitting with respect to local indigenous peoples around the world, just local communities, various political winds of change could change permitting. For instance, you're seeing in some regions they're not allowing any coal mines to be permitted, which is kind of funny because people don't understand that there are two types of coal. There's met coal and thermal coal, and we kind of need met coals to build our Teslas and our transmission towers to electrify the world and our nuclear power plants. So there's the more the governments and the environmental do-gooders get involved in the mining sector, the more they're screwing it up. So we kind of have to I have to kind of figure out. We have to kind of be a step ahead of them and say, okay, we're screwing the market up this way, so then we need to do this. But sometimes like this whole Canadian ban on selling to state-controlled Chinese companies just came out of the blue. I'll give you an example too. It came out just after a Canadian company that I was an early investor in, Lithium. I was a seed investor in that years and years ago. I've been long out of it, but in an extraordinary brine situation in Argentina. And so we have the Canadian government telling the company who it can and cannot sell a project in Argentina to. So they're taking extra territorial powers. They're basically telling Canadian companies who they could sell an Argentinian project to. And my personal view on that is Canadian government should have zero say in that. It should be the Argentinian government, whether they think it should be sold to the Chinese or not. And so that's just one of the many unintended consequences of these government do-gooders and the pressures on the world today. And I'm not sure if you're seeing this in Australia as much, but obviously there is
We did have, it was a bit more prevalent like in peak COVID times, but in Australia we had a similar dynamic where I think one case in particular, there was an ASX listed company with a project in the DRC and Australia, ultimately Australia's Foreign Investment Review Board, FIRB, blocked a Chinese associated deal there. It was AVZ Minerals, a lithium company at the time. But I think the harshness of some of those FIRB denials has relaxed a bit, but don't get me wrong, like it's still a pretty tricky environment, especially to do deals with Chinese entities in Australia.
Yeah, the funniest thing I see here in the market is you've obviously got a Cold War brewing between the Chinese and the West, mostly the U.S. And the U.S. is trying to bring all the allies together to go against the Chinese, and it's the consequences there are many, many unintended consequences that hurt everybody by doing this because. If I'm just one person who will definitely think twice about putting money into finding copper, is that going to help the world or hurt the world? And taking a look, DRC is an interesting place, right? I tried to do business there some years ago, and I had an outstanding project, and I put together an outstanding team, which was going to just set the world on fire in the DRC. I had buy-in at the highest levels of the government there, and then as I got more into it, at the lower levels, I started getting roadblocks with people asking for bribes, right? So had to walk away from that deal. But so you got a situation here where the DRC is a reasonably corrupt country, and you've got people with their hand out looking for bribes. Canadians, Americans, Australians are all under obligations that we cannot bribe people. And then, so we have to walk away from these deals. So, well, then who's left? Well, it's the Chinese, because they don't care. They'll go in and bribe anybody they want to get these projects done. That's why they're building projects like crazy in Africa, and that's why the West is having a tough time doing it, because it's difficult for us to do anything in Africa because of that. And it's not all the countries. There's some tremendous countries in Africa where everything's in pretty good shape, but certainly the DRC, the Chinese are much better suited to doing business in the DRC than North American companies. And so there's an instance where the very, very tight laws that the U.S. has with their Foreign Corrupt Practices Act impacting American mining companies, it's difficult for them to operate in the DRC because nobody wants to end up, in prison. So who fills the void? The Chinese fill the void because they don't care. So there's a lot of things going on around the world that have, there's cause and effect, right? So, and now we have, so it's getting much, much more difficult, most difficult in my entire career to actually find a mining project and have it create value for shareholders just because of all the rules, regulations, and recently government interference from many, many angles. And it's getting really, really tough. So for me, how does that impact me? Well, that means that I have to be much more focused and make sure that everybody I deal with is, that there's basically more options than selling to the Chinese when we do make a discovery. Make sure that we operate in jurisdictions that are not corrupt. And by the time you whittle that down, it really cuts back on what countries around the world I could invest in. Because of all the rules and regulations that are building up over the past 25 years, it's getting very, very difficult. And this is all happening in a time when, in theory, we're supposed to find metals to electrify the world. And meanwhile, the governments are putting roadblocks at every point to stop us from doing that. So it's, I could be frustrated by it, but, it's just getting really, really tough to do my job, and it's getting tougher every year.
So you talked about how hard it is to find the right team, find the right project, and so on. And then on the other hand, you get all these risks that just seem to come out of the blue or are obviously there already. How does that sort of play into how you build your portfolio? How many names do you like to hold? What sort of position sizes do you sort of build?
Yeah, for me and myself, I try and keep the positions less than 15. So I try and keep them quite concentrated. It's the only way I can really keep a handle on all the names. Like for people who, you'll see this in mutual fund land where they're invested in maybe, 100 or 200 juniors. And trust me, there are not 100 good juniors out there, right? So I try and cherry pick the absolute finest ones in which are in ideally, let's say you're in an established mining country where you're not dealing with people who are not familiar with mining. There's and that generally leads to local buy-in. There's also a number of precedents set in those environments dealing with Indigenous people. So the Indigenous people know what to expect in terms of employment and economic benefit. The people who are the government that are permitting are well-versed in permitting. It can get done in a reasonably quick time frame. And then mining companies are familiar with it because they're used to operating in a country like that too. So that's sort of what you almost have to go for these days because it's increasingly getting very, very difficult. I'll give you an example. Like there was a uranium discovery in Spain not that long ago by Berkeley Energy. And I remember, the guys at Berkeley coming into my office telling me, oh, we're going to get this permitted. We're going to get this, we're going to do this. And I said, I don't care what you tell me. There is not a hope that you will ever get this uranium mine permitted in Spain. And sure enough, it's not permitted in Spain. Well, why is that? Well, because there aren't other uranium mines that people can say, well, look, this uranium is mined safely in this jurisdiction. It provides a lot of jobs. Nobody's dying of radiation. It's done in a very responsible environmental manner. And you never, so to get that across to the Spanish people in the region without other uranium mines already there, creating economic value and showing the good mining has in a region, it's very, very difficult.
So if you know Berkeley, Warren, it looks like you do know some ASX names after all.
Yeah, well, was that not listed in the TSX too?
I'm not sure. I only know the Aussie listing.
Yeah, I see some funny Aussie companies come by once in a while and generally the question I ask myself is, I occasionally have to listen to a pitch from an Aussie company, and I go, one of the questions is usually I go, why am I listening to a pitch from an Aussie company when, like by the time they come to Canada to raise money, they've already asked everybody in Australia and they wouldn't give them any money. Then here they come to Canada.
Well, the equity markets are a bit easier to get away in Australia, I think.
What usually happens then is I make a few phone calls and go, okay, who are these guys? Oh yeah, you don't want to invest with them. Yeah, what do you do? The mining industry is filled with a bunch of characters, that is for sure.
Absolutely.
That's for sure.
We're conscious of keeping you long. I'm very keen to get your take on like how is the rest of this commodity cycle going to play out?
It's people are expecting it to play out like previous commodity cycles, but I'm sure there'll be some. What was somebody had? I remember one saying, "It won't be exactly the same as the previous commodity cycle, but it'll rhyme." I think that's a Rick Rule comment, and so there will be different things about this commodity cycle. There will be a lot more government interference because in previous commodity cycles, the government couldn't care less about mining. They had more fun things to deal with, but now. Oh, everybody's all green. Everybody's all this. Everybody's all. They're all thinking they need to get their fingers in the pie there and start screwing things up with respect to. Well, let's throw some new regulations at these guys to help them out. Well, you're not helping us out. You're not helping the world out. You're screwing everything up. So the government's going to have much more involvement this time. And for me, with how's that going to impact me, I'm just going to be ultra cautious on jurisdictional risk and making sure there's local buy-in, local indigenous buy-in. It's I'll de-risk things by being in established mining camps with strong precedents of, value creation in the region and people who are positive with mining. And as far as me getting involved in anything that's a little sketchy in any region that's even remotely sketchy, I'll stay away from that because
Do you ever think, your philosophy is investing in the undeveloped project, and the dynamic you're describing is it's harder to get these projects sometimes permitted because of these, government dynamics. Do you ever think it could be a phase where it actually pays to be invested in producers instead of developers right now?
Yeah, possibly in the early stage of something, if you're expecting the commodity run. The reason I don't invest in producers is because the key driver for their valuation is the commodity price itself. And I do not believe I'm smart enough to predict the commodity price. What I believe I'm smart enough to do with my, minimal intellectual capacity is go into a junior and assess whether or not they've got a big discovery at hand. And generally when I do that, if you find 10 million ounces of gold, for instance, so it goes from zero, the junior goes from 0 ounces of gold to 10 million ounces of gold. Even if the price of gold is dropping $200 over that period, an ounce over that period of time, you're still going to make a fortune, right? So I don't spend, 2 seconds thinking about, well, I get calls every day. Like, Warren, do you see the price of copper's down a nickel? I said, I don't care. Like, I don't care. What I care about is finding 4 billion ton, copper porphyry in a jurisdiction that we actually mine it. That's what I care about. And if the price of copper drops from $4 to $3.50, that's not the main driver. The main driver is the size of the discovery, the grade of the discovery, and where it is, and whether we could sell it to a major or not. That's the main driver. I don't know too many people in the mining sector that have been able to predict commodity prices all that well to the point where they actually make any significant money on it. But I've had some fortunate ability to find some discoveries early stage that were underpriced and jump on them pretty hard and end up selling them to majors for a big price at a later date.
Warren, you wrote a great article on Bre-X, which we'll chuck in the show notes so people down here can see it as well. And it sort of ties in with why you say you come on podcast. You said this guy sort of saved your ass on Bre-X and gave you a bit of a heads up. And I'd love to sort of hear, what are you seeing right now in mining, in the industry, that you think sort of junior, like younger investors sort of need to be saved from?
Well, reading that article, and if you Google my name and Bre-X, BRE-X, I think that 4-page article, I think, is possibly one of the most insightful articles in a short little compact package where people could learn quite a number of the tricks that happened during the 90s bull market in commodities.
And for the listeners that don't know, this is the story that is the reason why we now have JORC reporting.
Yeah, so I was a major player in Bre-X in that I was a major investor in it. I made a lot of money, both on the long and the short side of it. And when the movie Gold came out, which is a movie about Bre-X, I thought the movie was so off base that I thought I'd write an article. And you're exactly right. In that article, I mentioned how I coincidentally ran into this old mining guy in an elevator. And he took my naive ass out for lunch one day and explained why he thought Bre-X was a scam. And he went through all the different reasons why. And I was just dumbfounded as a young punk kid, just going, wow, the mining industry is this dishonest? I couldn't believe it. And yeah, it was quite outstanding. So what my role is really is, what I like to do is explain to people some of the scams that do occur in the mining business. I try not to get specific with names because, I'd rather not get any more death threats than I'm getting already. But there are a lot of scams out there in the mining business. As you're aware, in the Australian markets, just like in the Canadian market, there's lots of companies that are created not to ever find anything, but basically to line the pockets of the people setting up the companies. And that article I wrote, 4 pages, it gives you a summary of my adventure in possibly, I think I stick my neck out and say, the absolute finest mining scam in the entire world. And I had a front row seat, and I wrote a little 4-page article explaining my little adventure in Indonesia. And it was a fascinating time. It was a fascinating story. I learned a ton. And the level of skepticism I picked up from this old timer who took the time to sit down with me over lunch and explain how the mining business worked, it saved my ass many times over in my career. And possibly that's the reason I'm still in my career, because I haven't fallen for all the scams over the years quite as badly as I may have. It's tough to miss them all, but I think I've had a good record of staying out of the scams.
Are you seeing many on the radar at the moment?
Scams? Absolutely. Yeah, I got into trouble the other day. I was saying some bad things about a scam. And there are a lot of powerful people behind these scams sometimes because there's a lot of money at stake. Mm-hmm. So I just sort of, keep my head low. My view is to give people the tools to find the scams. And the scams that are out there, number of them are reasonably easy to figure out if you have half a brain. The most important thing for a new investor, I think, is to know there are a ton of scams out there, lots of scams. And they're run by people who are serial scammers. So if you look at their background, you find out that they really haven't made any discoveries. And when you do fact check on their background and what they say they've accomplished, and you get into it and you find out, well, yeah, they really weren't part of that discovery they claimed. Or they really weren't part of that, or yeah, well, they were the guys. There's always the guy. If you got a stock promoter out there, he's generally, if he's a scammer, he's done it before. So just follow the background and find out what he's done in the past, and you're not going to be surprised that you don't turn from a scammer to a legitimate mining guy overnight. In fact, I've never seen a person change from a scammer to a legitimate mining guy.
Sometimes people get lucky; they get a discovery.
I can think of one example. Yeah, I don't want to name his name because he had to leave the country in his early days in his career. He had to leave the country for 7 years to let the statute of limitations run off, and then he came back to Canada and ran a mining company that happened to sink a drill hole into one of the richest gold discoveries in the world, and then spent the rest of his career polishing his reputation. So
we've got a few of those in Australia too. We celebrate them.
Well, it does happen because even scammers accidentally get lucky once in a while. And there's this one scammer in Toronto, or sorry, not Toronto. He's out of Vancouver. He, and I'm going to write a book eventually in my later part of my career with all these scam stories. But he used to rent pickup trucks to the mining company by the hour. And he'd just be fleecing the company like crazy. He rented an ambulance for $400 a day to the company. That ambulance was basically a pickup truck with a little cap on the back and a stretcher in it, and that was an ambulance for $400 a day. The truck probably cost him $400. So he was busily just stripping all the assets out of this company for his own benefit. And he'd come into my office, and one look at the guy, you knew the guy was a scammer. But, I did the work on the company and going, I really think they have something here.
Unfortunately, the even in that case, the NPV of the company is still zero if all the capital gets extracted by the scammer.
Yeah. So what ended up happening, right, is other people figured this out too, and sure enough, they removed the scammer, and it's going to be a mine. So
good.
Yeah. So it's going to be a mine, and there's lots of funny, fascinating stories like that, and the mining history is rich in stories, and I spent 4 years as a kid up in Timmins, and the story of how the Hollinger mine was found, or the McIntyre mine was found, or Noah Timmins, and how he made all his money in silver initially and then gold, and it's just filled with the wildest and craziest characters, as I'm sure there's a very, very rich history of Australian entrepreneurs also in the mining business.
Absolutely. I think the scams went way back in the day. You used to sell a mine and you'd put some gold dust inside a blank gun and you'd shoot the walls and be pointing to the gold dust
through
on
the shotgun.
Yeah, and that's how you could sell a gold mine for a lot of money. So I think the scams have existed forever and will continue to. They evolve as capital markets become more sophisticated, but we're very grateful to have a sophisticated eye like yourself explain what you look for to spot them. And I think we should definitely do this again, Warren. There's definitely two separate conversations that we would love to have with you again. One is just a deep dive on the Bre-X story in a chronological order, and the second one might be what are the red flags to look for when looking at a mining investment. So we'd love to do it again and appreciate your time today.
And I can definitely say you've got two people that would buy that book straight away down here.
Well, thank you for that. I'll put your orders in the book already. Harry, thank you.
Thanks for your time, Warren.
Nice chatting, and you take care, guys. Cheers. Bye-bye.
Cheers, Warren.